We're going to MP Sorbara, please.
Thank you, Chair. Can everyone hear me clearly? Just before I begin, just want to make sure everyone can hear me. Listen, it's great to hear all this testimony today. I don't see, I see Mr. Robson on screen, and obviously I don't see Mr. Sargent. I know he's there. Mr. Robson, Mr. Sargent, you're both two economists. Mr. Robson, I tend to read quite thoroughly the material that's put on the CD Howe Institute, and I see Sandra Pupatello, a good friend of mine, has now joined. So some great folks working there. But there's one thing I'm very disappointed about on both your commentary. Not one of you mentioned, neither one of you mentioned, as esteemed economists, or supposedly, that Canada's fiscal deficit is roughly 1%. And what is the United States fiscal deficit? If we want to make the comparison, it's over 7%. The comparison would be Canada would be running a deficit of over $300 or even $400 billion a year if we were doing exactly the same thing the United States was. Secondly, Mr. Sargent, I have to correct this record. The foreign direct investment, Lind, $2 billion, Dow, $10 billion, Honda, $15 billion, Stellantis, and the list goes on and on an FDI basis, on a per capita basis. You know the numbers as well as I do. Canada is doing very well on a per capita basis, actually number one. Also, the IMF. You folks, you two can get up tomorrow morning and write the IMF and tell them they're wrong. Because the IMF said this, increasing the capital gains inclusion rate. And we all know what surplus stripping is. And I'm surprised you guys don't mention surplus stripping and how that tax avoidance strategy works. By the IMF, increasing the inclusion rate improves the tax system's neutrality with respect to different forms of capital income and is likely to have no significant impact on investment or productivity growth. Now, maybe the folks at the IMF are all wrong. Maybe you folks are all right, but you didn't mention both sides. You didn't talk about the fiscal deficits. You didn't talk about the neutrality and integration aspect on taxation. Somehow these aspects got left out of your testimony. And I'm just curious, why? I'm very curious. So with that, I would like to ask this question. On electric vehicles, has Canada attracted billions of dollars of investment here in the Canadian economy, including the $155 million investment that was announced right here in the city of Vaughan 2 days ago by a South Korean company creating 300 jobs? Also, no one mentioned that in last month. There were over 100,000 full-time jobs created here in Canada. And the other aspect you guys didn't mention, and I have to say this, if we've achieved a soft landing, Mr. Robson, has Canada achieved a soft landing, yes or no?
Canada is in a long period of stagnation. So
stagnation. So I have to correct. Stagnation is defined as when inflation and there's zero growth. Inflation is falling, interest rates are falling, the economy is growing moderately. And did you not see the forecast from in the Financial Times, both of you, that the Canadian economy will lead the G7 in economic growth in 2025 and be number 2 here without a 7% fiscal deficit? Am I the only one reading that stuff?
Chair, how would you like us to respond to this? There are a number of points on the table.
I'll give you 20 seconds each. Please, 30 seconds each.
Okay, the U.S. fiscal situation is terrible, and it's one of the reasons why I think it'd be good for us to make our fiscal situation better, because I think interest rates are likely to go up because of all that borrowing pressure. If you're worried about integration and consistency and surplus stripping, why would you make the inclusion rate different in different places? The problem that creates is much worse than the problem it was notionally supposed to address. I do think the IMF is wrong.
Only 12% of corporations actually are impacted by the capital gains inclusion rate. And the marginal effective tax rate for manufacturing investment here in Canada is, I'll even send you the chart myself, is actually the lowest in the G7. There are many, many things with this country that are blessed. They're blessed with. There are many things we need to work on. Absolutely. This is Canada's decade, and I'll repeat that over and over again. Everything we've done on AI to hydrogen to green to electric vehicles and so forth is going the right way. And I'm so happy that 1 million Canadians have now gone to the dentist and gotten the care that they need. It may not be a social program that Conservatives want. And we know, I'll say this, we know the Conservatives have said they're going to cut the Housing Accelerator Fund to accelerate housing. here in the city of Vaughan, in Richmond, in Markham, and that's real dollars being put to work here in those cities. Confident governments and confident countries invest in their people, and that's exactly what we're doing. And I'm disappointed neither one of you talked about fiscal deficits in the United States versus Canada and our fiscal position in our AAA credit rating. All you did, especially to Mr. Sargent from the Macdonald-Laurier Institute, was just talk down the economy. I thought you were sitting on the opposition benches for a couple of minutes, and I'm trying to be non-neutral as an economist. Chair, I'll turn it back to you. I think my 5 minutes is up. I wish to thank everybody. Happy Halloween.
And now we are moving to round three. We do have enough time to go through a full round three today. So I've got MP Kelly for next 5 minutes.
Well, thanks, Mr. Chair. Given that Mr. Cerbera didn't allow, he challenged two of our witnesses and then wouldn't allow a very small reply before interrupting Mr. Robson and didn't let Mr. Sargent get in at all. I think that some of these points need to be addressed by the actual witnesses today, because this is what we do at the committee. We call witnesses that provide evidence that form part of the report. MPs don't provide the evidence for reports. So, Mr. Sargent, do you want to start and maybe tackle some of the points that were raised?
Sure. Just quickly going down the list. I mean, firstly, the United States government gets to borrow in US dollars, which are the world's currency. And so they have a lot more way to go before they run out of fiscal road than Canada, which is a much smaller economy, and it's only borrowing in Canadian dollars. I didn't actually finish my thought on foreign direct investment, so I didn't actually say anything about it. But had I been able to continue, what I would have said is that, yes, Canadian direct investment foreign direct investment in Canada has increased, if you look relative to the US, but it has been dwarfed by the amount of money that's actually leaving the country. So we are actually now have a net deficit on our investment relationship with the United States, and these numbers are in a recent Royal Bank of Canada report.
Sorry, if I may, on that point, do you have a number of that deficit of yes? So there's money coming in, but there's much more money leaving. What is the total of that investment deficit?
So we have 600 billion coming in, $1 trillion going out. So that deficit is 400 billion in 2022.
Okay, so despite what we heard from Mr. Cerbera, we're actually down $400 billion in net direct investment. Okay.
Exactly.
Thank you. I'll let you continue if you had other points to make.
I guess my last point is investment in electric vehicles. We're certainly not seeing that yet in the investment numbers.
Chair,
if that shows up, that's great. But I'm talking about...
Chair, can I do a
point of order? Point of order. There's a point of order.
I wish to comment on Mr. Sargent's testimony in terms of the foreign direct investment, because you can measure Canada's foreign net investment position in different manners. And Mr. Sargent is measuring in one way. It's not
everyone. Calm down. Way. Calm down, everybody. Oh. Thank you, MP Cerbera. It's not a point of order. Maybe you'll have an opportunity after, but we're going back to MP Kelly.
Sorry, please continue, Mr. Sargent. Okay, with that, I'll maybe, with the time I have remaining, I think Mr. Robson may have had a further comment or two on some of the things that were raised in the previous intervention.
Well, I'll just continue on the topic. Foreign direct investment, like Canadian direct investment abroad, tends to happen in big lumps. So it's very important that we look over a reasonable period of time and not seize on a single quarter. In general, though, I take the side of Mr. Sargent in saying that the trends have been a bit unfavorable. One of the biggest things that foreigners are investing in when they buy Canadian assets is government debt. And it seems to me that that's a problem because unlike the sorts of assets that would produce incomes and growth in Canada, all that their purchases of government debt are going to produce is interest outflows. So I do think that it would be a good idea for governments to absorb less of the saving in our domestic economy. That would create more room for domestic investment to be funded domestically. And so I do think that the size of the federal government's borrowing and provincial government borrowing as well, notwithstanding that it's less than the United States, is a problem for us and something that we'd be better off. We've had 10 years of continual deficits and very rapid growth of debt federally. And over those 10 years, we've not seen a lot of economic progress. And under previous governments, including those of Prime Ministers Chrétien and Harper, when the federal fiscal situation was better under control, we had better investment and we had better economic growth. So I think those things are related.
Thank you.
Got a minute.
Oh, well,
Yeah.
that's just that. Thank you for clarifying all those points. And so, if it'd be fair to again summarize to say that we have the growth of government and government deficits that are choking out and are absorbing the savings rather than resulting in investment in the economy. We have regulation that is preventing projects from being completed. Mr. Sargent has pointed out that nothing has been approved under C-69. Everything is just stuck in the bureaucracy of approval, and we have rising taxes and shrinking living standards. Is that a fair summary of the current course of this government?
Yes,
Okay.
Canadian. And if I may just quickly comment, yes. We've had quite a bit of discussion in these hearings this session just now on the fact that GDP per capita, income per capita has been falling. I will point out that the capital stock per worker, which is the consequence of low investment rates, has now fallen for 7 straight years. That hasn't happened since the 1930s. And it would be very surprising if you could sustain higher living standards when your capital stock per worker is falling. If you look across the world, the countries with high capital stocks per worker, the worker who's digging with an excavator, they have higher incomes, higher productivity than the countries with low capital stock per worker where they're digging with shovels. And we want to be digging with excavators, not shovels.
Thank you, MP Kelly. And